All right, dear friends, today we shall be looking at control accounts. Control accounts is a very important topic in principles of accounts. Uh, Previously, we looked at the preparation of the sales ledger and the purchases ledger. The principle is the same. The way you prepare those two ledger accounts, that's the way we shall also be preparing the control accounts. Now, when we are talking about control accounts, we are talking about an account that is in the general ledger, okay? And it provides a summary of the debtors ledger and the creditors ledger. I'm saying it provides a summary because as an entity, you may have different types of ledgers. Okay, you may have also a good number of ledgers to do with the sales and also the purchases, more especially if your business has got branches in many places. So what will be happening is that the responsible officers will prepare these ledger accounts. But to present these different ledger accounts to the management becomes a bit cumbersome. So you need now an account that is providing a summary, okay? A summary of all the data ledger accounts or the creditor ledger accounts. Therefore, control accounts are in that case known as total accounts. Total accounts. Now, what's the purpose of preparing control accounts? So now we look at the purpose. The first purpose of preparing control accounts is that control accounts, they help in checking arithmetic errors in the ledgers. Okay, so the first purpose here we can say checking arithmetic errors in ledgers, checking arithmetic errors. Then the second purpose is that control accounts, they act like a trial balance for each particular ledger. Okay, so the second one, act like a trial balance. A trial balance. Okay, then the third purpose of control accounts is that they use a technique that is quick to identify the errors in the accounting records. Okay, so we can say use a technique, okay, to identify errors. Okay, they use a technique to identify errors. And the fourth purpose is that it's only those ledger accounts that are having errors or that are having balances that are not agreeing with the individual balances of the either the creditors ledger or debtors ledger. Those are the only the accounts that need to be checked. Then you locate those errors. Okay, so fourth one we are saying only ledger accounts whose balances do not agree needs to be checked. Needs to be checked. So these are the four purposes that we follow when we are preparing control accounts. So we are saying the first one, checking arithmetic errors in the ledger. The second one, act like a trial balance. The third one, use a technique to identify errors, a technique that is quick. And the fourth one, on ledger accounts whose balances don't agree needs to be checked. Okay, now we can now look at the types of control accounts. The normal types of control accounts that we'll be looking at are two. The first one is the control account that deals with the sales ledger. This one, that is for the sales ledger, is known as the sales ledger control account or total debtors account. Okay, so we can write here the first type is the sales ledger control account or total debtors account. Then the second one is the control account that is for the purchases ledger. This one is known as the purchases ledger control account or total creditors account. Okay, so we can write purchases ledger control account or total creditors account. So these are the two types of control accounts that we'll be looking at. All right. Now, for you to prepare these control accounts, it is also cardinal that you know the items that should be included in these accounts and also the source of information for these items as you prepare them. So we'll start with the sales ledger control account or total debtors account. So here we can write debtors, or we start with total debtors account. Now, what items do you find in this account? The first item that I will write here is the opening balances. Opening balances. So the opening balances, the source of information for the opening balances is from a list of debtors that you had at the end of the previous period or trading period. Okay, so we can write here source is list of debtors from previous period. Okay, then the second item that you find in the debtors account, total debtors account, credit sales. Credit sales. So the credit sales, the source of information is from the total sales journal. Okay, total of sales journal. Total of sales journal. Then the third item, you have cash and check receipts from your credit customers. Okay, cash or check receipts from your credit customers. Now the source of information for this is the cash book. Okay, the cash book. Then the fourth one, you also have returns inwards. Okay, returns inwards. Returns inwards. The source of information for the returns inwards is from the total of the returns inwards journal. Okay, total of returns inwards journal. Okay, then for my presentation, I'll end on the fifth one. Of course, we may have some other items, but the fifth one will say closing balances. Closing balances. Now, the closing balances, these are taken from the list of the data at the end of the current trading period. Okay, list of debtors from current trading trading period. Now, allow me to mention that even you that it was a debit balance or credit balance, take it that it is a balance brought down, so that when it comes to handling the balance carried down, you'll be able to know the side where you should place it. Usually we say if you have a balance brought down as a debit entry, then the balance carried down was on the opposite side, okay, which is credit. So when you are given the closing balance, you look at the side which has been indicated in the brackets. Take it that it is a balance brought down, so that you are able to indicate correctly the balance carried down. Now we can look at the creditors account, total creditors account, okay, or purchases ledger account, or purchases ledger account. What items are found here? Okay, so the first item here also is the opening balance. Okay, so we have opening balances. Okay, so opening balances for the purchases ledger control account or total creditors account comes from the list of creditors at the end of the previous period. Okay, so we have list of creditors at end of previous period. Okay, then the next item that you have in this account has to do with the credit purchases. Okay, credit purchases. Now, when you look at this, in the other account we say credit sales, and here we are saying credit purchases. When you are given a question, the examiner may just want to confuse you a bit to see the skills that you have about this account. So they will include something to do with the cash sales or cash purchases. Remember, we prepare these accounts because of the credit transactions that we do. So if you're given credit, cash sales or cash purchases, never should you include such an item in these accounts. We only record credit purchases in this case, or credit sales in the other account. So credit purchases, these are coming from the total of the purchases journal. Okay, total of purchases journal. Okay, so this is for credit purchases. Then the third item has to do with the cash or bank payments that are made to the suppliers. Okay, so you can have cash stroke check here, payments to our credit suppliers. So the information is taken from the cash book. Okay, from the cash book. All right, then the fourth item here will include returns outwards. Returns outwards. Returns outwards. And the source of information is from the total of the returns outwards journal. Okay, total of returns outwards journal. Okay, then the fifth one, we have the closing balances. Okay, closing balances. So closing balances, these are taken from the list of creditors at the end of the current trading period. Okay, list of creditors at end of current period. Current period. All right, so I've picked these 5 common items. We may have some other items, like for this one, you may have an item to do with the discount received. Here you may have something to do with the discount allowed. Okay, so what is important is to know which item affects a particular account, and that should be recorded, because for the examination purposes, certain items are just included there so that to see if really you know what you're supposed to prepare. All right, now we can also talk about certain items that are found in these accounts. The first item that I want to talk about is the transfer. Okay, transfers. So when we're talking about transfers, uh, these transfers, we call them as contra settlements or set offs. Contra settlements or set offs. So what happens that when you're in business, for instance, you are a customer of Dangote. Okay, since you're a customer of Dangote, it might happen that you are also a supplier to the same Dangote. Okay, so you have a sales ledger, okay, in the books of Dangote. You also have a purchases ledger to do with the Dangote. Okay, so in case you are owing Dangote 1,000 kwacha and Dangote is owing you 1,500 kwacha, what can happen in business is that if you want, you can decide to settle the full amount. You pay the 1,000, he also pays you the 1,500. Or you can go for the second option where you just go for the difference. In this case, Dangote is owing you more by 500 kwacha, so he pays you the 500 kwacha, then the transactions are settled. Now, once that happens, this contra settlement has to appear both in the purchases ledger control account and also in the sales ledger control account. So what you need to be doing is that if you have a contra settlement, the contra settlement should be recorded on the debit side of the purchases ledger control account and on the credit side of the sales ledger control account. So that's how you handle the transfers. Okay, then the other item that should be of some concern when you are given a question of this nature is about having balances on both sides. Having balances on both sides. So when you are given a question, they will indicate this balance should be on the debit side and this other balance on the credit side. So this may be in both the debtors ledger account, or the sales ledger control account, or the purchase ledger control account. So when you have such a situation, you just have to record the balances in the same line. Okay, then you may also have some negative balances. Okay, you may have some negative balances. So once you have such kind of a situation, you find that as you close off your account or as you balance off your account, you'll be forced to have two figures as your balance is carried down. Okay, so that is a normal situation. Whenever you're faced with such kind of a question, take it easy, follow what you have been given, look at the instructions. So now let us see how we can prepare both a debtors a total debtors account and also a total creditors account.